Happy New Year and welcome to the new Citi Market Watch, where we concisely unpack all you need to know on important topics. With me today, Audrey Cheong, Citigold Private Client Portfolio Counselor.
Happy New Year and wishing you a wonderful and prosperous 2022 from Citi.
Overall, 2021 was a good year. We saw strong gains in the US with the S&P 500 up 28%. Similarly, Europe's Eurostoxx 600 was up 22%. Our unstoppable trends also made strong gains, and the only disappointment was really China, where regulatory efforts saw de-risking across China and parts of Asia. Worth noting that elsewhere in Asia, Taiwan, India, and Japan did very well last year. Audrey, what are the highlights from Citi's 2022 outlook?
Thanks, San. Well, the catchphrase is Citi sees enduring and thriving growth in 2022. Now, global GDP will remain positive at 3.8%, with earnings following through at around 7 to 8%. 2021's aggressive rebound was predicated on historically strong policy support, vaccines, and an eagerness to return back to work. Now, macro policy is now relaxing, and we are seeing central banks raise rates in line with the economic rebound, and in some cases to take the edge off inflationary pressures. Now, with higher valuations and a rebound to long-term run rates, broad strategies need to focus on quality, on dividend growers, companies with strong balance sheets and earnings, recurring revenue, and consistent return on equity. Now, importantly, this means reducing risk in high beta, cyclicals, or mean reversion strategies, which were the highlights last year. Now, the current environment or cycle needs you to be a marathoner, not a sprinter.
And Citi's unstoppable trends continues their relentless march ahead, as trends should and do. Greening the world stepped up last year post the Glasgow summit with firm commitments globally for net zero. Asia's resilience saw the highest growth in 2021 at almost 8%, and the best in the last 11 years. We expect Asian outperformance in 2022 as the worst of China's regulatory tightening is over. Structurally, Asia's expanding middle class, manufacturing-based, technology and services focus sets itself up for a strong snapback and longer-term gains. The pandemic accelerated digitization, and we now see further online hyperconnectivity as 5G becomes more prevalent. Fintech redefines financial services, and hybrid work reinvents real estate logistics for a digital economy. And as an overarching need to protect this infrastructure, look for opportunities in the need for cybersecurity. Lastly, we see healthcare continuing to deliver stable growth with defensive characteristics. Audrey, what about fixed income and risks?
Well, Citi's other catchphrase is that the cash thief is on the prowl. We continue to live in a very low yield world, and with negative real yields prevailing through 2022, this will likely be the largest drag on portfolio returns in decades. So be mindful or stay underweight fixed income allocations. Now, to be fair, this is not the case across emerging markets, though there are different concerns here. The obvious risks are a renewed viral outbreak, inflation being far more persistent than we expect, China's relationship with the US deteriorating, and a large-scale cyber attack.
Thank you, Audrey. To recap, 2022 will see enduring and thriving growth, but the overriding factors requires investors to be very conscious and mindful about negative real yields, how this drags on portfolio performance and impacts different asset class and performance, and really necessitates a focus on quality strategies and allocations. Please speak to your Citigold or Citigold Private Client Relationship Manager on aligning your portfolios to 2022's outlook.